Good evening. I'm Pam Dukeman, 57 Sexton Ave, and I am the Assistant Town Administrator and Finance Director for the town. Each year at town meeting, we'd like to provide you with an update on the town's finances and some background on the financial articles that you'll be asked to vote. The information that we're reviewing is included in your town meeting warrant book, and there's also additional information on the town's website. Also, the Select Board, Finance and Warrant Commission, and School Committee have been working on the budget since last fall. Presentations made at any of those meetings are available on the website, as well as the recordings of those meetings on Westwood Media's website. And we thank Westwood Media for their help in helping us to get all the information on our finances out to the community. As we start to look at our update on our finances, it's important to know that our budget must address multiple areas of the town's finance. We first look at our operating budget, our main area of providing services to the community through our school and municipal budget. That's the area that's most familiar to people in town. However, it's also important that we address our capital budget. We need to make sure that we're properly maintaining our town facilities and that we're providing appropriate and efficient equipment for our departments to use, particularly our public safety and public works departments. We also need to address our reserve accounts, making sure we have appropriate funding to protect the town in case of emergency, and it's an important component of our credit rating. We also need to address our long-term liabilities. Those include our pension and OPEB funding. And we're always trying to address all of those items on the impact on our tax bill as we are financed through our real estate tax revenue. It is a very difficult balance to handle all of these areas. Over the last several years, our Select Board, our Finance and Warrant Commission, and our town meeting has done an excellent job at making sure that we're presenting comprehensive budgets that address all of these areas. Looking first at our revenue, the FY23 total revenue budget is $112 million, or about a 4.2% increase over the current year. The pie chart shows you the components of our revenue, with our main area, real estate taxes, shown by the blue piece. Almost 80% of our revenue comes from our real estate taxes. We have a much lower reliance on state aid, shown in the gray slice at about 6% of our total revenue. This is a very typical revenue chart for a suburban community in Massachusetts. If you saw this same chart for a large city in Massachusetts, you'd see a much higher reliance on state aid. So, as I said, we are very reliant on our real estate tax revenue. That means it's always a challenge to present a balanced, comprehensive budget. Our revenue source is restricted by a formula, Proposition 2.5, and again, we always must balance the services we're providing with that impact on our tax bill. Looking next at that revenue from taxes through Proposition 2.5. A lot of people think Prop 2.5 limits the increase in their tax bill to 2.5% each year. It doesn't. Prop 2.5 really is a limit on the total taxes that the town can raise, and it's really driven by a formula. This slide does show how that formula works. The column on the right is our budget estimate of taxes for FY23. As shown in red, the formula just simply begins with a number from the prior year. For us, that's $86.7 million. We're then allowed to increase that by 2.5%. We're then allowed to increase for an estimate of new tax growth. That's new taxes coming from any new development in town. That is not taxes from just increases in town value. If property values go up, that does not have any impact on our tax levy, but new development does. We're showing that in two lines, one for University Station and one for all other. We have separated the University Station simply so that people can look back and see what that increase has been over the last several years. At this point, the new growth is estimated. This will not be finalized until fall of 2022 when the Department of Revenue analyzes and certifies our new growth. Continuing with the formula, if we had a general override, it would come in next. And then that totals to what's called our tax levy limit for FY23, $89.4 million. The formula then allows us to add to that any interest and principal for exempt debt, any debt approved outside the limits of Prop 2.5. For FY23, that's just over $1 million. That then brings us to our total levy capacity. That is the amount that we could tax as a community. The red circle here shows what we're actually taxing in our budget, $90.3 million. The difference between the upper limit and what we're actually taxing is called unused tax levy, taxes that the community could have raised and spent but did not. On a budget basis for FY23, that's $160,000. If you look back over the last several years, you can see that our actual excess levy was higher, ranging anywhere from $800,000 to about $1.2 million. We do expect that this unused levy for 23 will be higher once our estimated new growth is certified in the fall. So that's Proposition 2.5. That's the formula that dictates how much we can tax in our budget process. So the town has not taxed to the maximum capacity in several years, and we have also not had a general override since 2007. That is primarily due to the new tax increases from University Station. Meaning if we wanted to have the school budget and the municipal budget that we now have, if we did not have University Station revenue, we would have had to go to the community for a general override. One more area on tax, looking at the taxes, is the commercial value. It's very important to the town's finances. The town has a split tax rate, meaning we charge commercial property at a higher rate than residential. As shown on the pie on the left, commercial value in our current year is about 15% of total value in town. But because they are charged at a higher rate, they pay, as shown on the right, 26% of the total taxes. So while value, again, 15%, they're paying 26% of the total taxes raised. This is a significant savings to our homeowners. Without the split tax rate, the tax bill for our average home in town would increase by an additional 15% or $1,800. Looking now at the expense side, FY23 total expenditures, $112 million, or about a 4.2% increase. The pie chart shows the components of that total spending. By far, as shown in blue, the largest area of expenditures is in our school and municipal operating budgets. Almost 66% of our total spending is that area. Next would be fixed cost budget, 18%, as shown in yellow. That's our overhead costs for all of our employee benefit costs, our health insurance, our pension obligations and such. And then our debt budget, 5%, as shown in red. So the largest area of our spending is providing that core service to the community through our school and municipal departments. And of those budgets, 80% of that spending is for staffing. So really our major source of spending is for our school teachers, our police, our firefighters, and our DPW employees in their daily operation of services to the communities. With the operating budgets, we strive for sustainable budgets. We strive not to grow those budgets bigger than we can maintain year to year, and we strive for stability to the school municipal budgets. Looking next just at that operating budget. The total operating budget for FY23, $105 million, or about a 3.9% increase over the current year. The bar graph does show the distribution of that operating budget, with the school component shown in blue, just over $52 million, followed by municipal in red, $22 million, the fixed cost yellow, and then our debt service in the green, about $5.8 million. That is a very standard distribution of the operating budget for a community in Massachusetts with a high-performing school district. So it's very typical where you'll see the school budget component being the largest component of the operating budget and almost twice that of the other areas. Looking further, the table at the bottom shows the increase by category in each of those sections of the operating budget. So our total growth for FY23, $3.9 million. The largest portion of that coming in our school budget, $1.7 million increase, followed by the fixed cost area, a $1.2 million increase over the current year, and finally the municipal budget, $800,000 increase over the current year. Looking next at our capital budget, it is important for the town to maintain our town and school assets, that we are maintaining our buildings, town infrastructure, our roadway and sidewalks, and again, our equipment that our departments use to provide their operations. The bar graph shows our base spending each year for school and municipal capital. As shown in green, the proposal for FY23, $2.3 million. As you can see on the graph, the $2.3 million is in line with what we've done the last several years and is in line with what the town's financial policies are for our target capital budget spending. If you look at the graph, you can see that about 10 years ago, we were far short of meeting our target on capital. And our Select Board and Finance and Warrant Commission and Town Meeting have done an excellent job the last several years in increasing that spending to more appropriate levels. We have received significant feedback over the last couple of years from residents that they are able to see that reinvestment in the communities. They see our buildings being better maintained, and they see the various assets throughout town, our roads, our fields, and our equipment for our departments being maintained at a more appropriate level. Since FY17, our town meeting has approved an additional capital budget article each year beyond those base articles. The effort with that article has been to catch up in capital from those years that we were not meeting our target spending, and also to handle any larger items that do not easily fit within the base capital article. The bar chart here shows you that spending each year in that additional capital article, with the target for FY23 in green, $682,000. Some of the items we've done the last couple of years include a large school IT network project, high school, the lighting of the tennis court. Last year we did the replacement of the multipurpose turf field at the high school and some large repairs for the pool. Each year in this article, we are funding projects using available revenue on hand, such as free cash or a meal or hotel tax revenue. Looking next at our town debt. It's an important component of our overall finances. The bar graph shows the total amount outstanding in debt at the end of each fiscal year. As shown in green, at the end of this year, fiscal 22, the town has $34.5 million in outstanding debt. It has been a very favorable borrowing climate for the town. We have a very strong credit rating. We hold a AAA with Standard & Poor's and a AA1 with Moody's. It's also been an excellent interest rate environment the last several years. We have also worked to target new debt that we sell to time that to replace old debt dropping off. Our recent bond sales do include a bond this March 2022. The town sold a $7 million bond that covered projects previously approved by town meeting for road work, DPW and fire vehicles, and the first two pieces of the new Hanlon Deerfield School project, particularly the feasibility and design portions. That bond had terms of 5 to 30 years, and we received a net interest rate of 2.2%. That followed a bond sale the previous March, 2021. The town sold a $7.7 million bond. That was to finance the Wentworth Hall project, some road work, and also included a refinancing of our library and Thurston modular debt. That bond had 8 to 20-year terms, and we received a net interest rate of 1.14%. So again, it's been a terrific interest rate environment and a great environment for the town to sell debt over the last several years. Each time we issue debt, we do go through an update to our credit rating. So this March, the town had an updated credit review with Standard & Poor's. We underwent a rigorous review process where Standard & Poor's reviews all of our finances, our financial practices, all of our town meeting action. At the end of that review, S&P reaffirmed the town's AAA rating. This is an excellent rating for a small community. It reflects very well on the work done by the town, all of our residents who serve on our select board, our Finance and Warrant Commission, our other appointed and elected position, all of our staff, and all of our residents and our town meeting for the professional way that they handle the town's finances. And as we've seen, a high rating helps the town issue debt at the lowest possible interest rates and saves money for our residents. Looking at our actual debt payments, efforts are made to be strategic in taking on new debt as our older debt drops off. The bar graph shows the annual debt payments each year, this graph for debt within Proposition 2.5. As shown in green, our total debt for FY23 is $3.3 million. We had a bond, a 2012 bond for roads that is $4.6 million bond, a 10-year bond that was completed in FY22. Our most recent bond that we issued this spring was a $4.6 million bond that began, the payments for that will begin in FY23. So as you can see by the graph, we were able to bring the new bond on as that old road bond ended and keep our debt at the approximate same level year to year. Looking next at our debt outside Proposition 2.5. This is for debt for any bonds approved outside Prop 2.5. And as shown in green for FY23, our total debt for those bonds is just over $1 million. So this is the exact principal and interest net of any state reimbursement for any bonds approved outside 2.5. When the bond ends, the taxing authority ends also. In FY23, we are paying for the high school and library bonds and also the first year of the first two portions of the new Hanlon Deerfield School. And as you can see on the chart, we were able to bring on that new debt and stay at the same level of that exempt debt from the current year. It's important to point out that the FY23 budget is our final year of the high school bond. That was a 20-year bond that we are completing in FY23. That's a huge accomplishment for the town to be done with that bond for that major project. And important to note that the school administration has done an excellent job in maintaining that facility so that it still feels like the new high school. And I know a lot of us still call it that. So important that as the debt ends, the building is still in great shape, and important that our select board and our Finance and Warrant Commission and our town meeting have made sure that we've had appropriate capital budget funds to make sure that we're maintaining that facility. So the last year that you will hear about the high school bond. Just a quick look at the financial impact of COVID. Our town meeting over the last several years has approved budgets that prepare us for a rainy day. Our town meeting approves structurally sound budgets. There are no one-time subsidies applied to our budget. We have very conservative revenue budgets. We are not inflating our revenue projections in order to spend more. Our town meeting has very purposely and methodically built our reserve counts to our appropriate levels over the last several years. As I mentioned, we strive for our operating budget growth at a sustainable level. We also have taken that meal and hotel tax revenue and designated it to a separate fund that is not applied to our operating budget. That is a revenue source that did see declines during COVID, but because that was a separate fund and only utilized once we have it in hand and only utilized by town meeting for capital budget, it just did not disrupt our operating budget. So our finances are designed to maintain essential services during a rainy day disruption. Our FY21 and 22 budgets have weathered the COVID financial impact. Important to note that we did not have any cuts to state aid during that period. We did not have to utilize any of our reserve accounts. And we were very fortunate to have outside funding to cover any specific additional COVID cost. So there have been additional costs over the last couple of years due to the COVID impact. Those included PPE purchases, the cost of remote learning, technology costs, holding vaccine clinics, impact to our public safety departments. There have been sufficient state and federal funds available to offset those additional costs. So specifically, we received $1.39 million in state CARES funding. The majority of that, about $960,000, was applied to the schools and $435,000 to municipal departments. We also received a school-specific state grant of $675,000, and then some smaller grants that were specific to Board of Health and our elections. We also were eligible for some FEMA, or federal emergency funding. So again, that additional revenue was available, allowed us to offset any additional costs that we received from COVID and allow us to keep our main budgets in place during those years. Looking now at the actual articles you'll be voting at town meeting. The financial articles are Articles 1 through 12. The first two articles, 1 and 2, are budget supplements for our current year, FY22, which ends on June 30th. These are cleanup articles that address any activity that occurred during the year. Article 1 is $190,000 and Article 2, $527,000. The major items being handled in these two articles include snow and ice activity. It did end up being a larger than normal year as far as our winter snow and ice. So we have some funds to supplement here. And then some funding, $215,000 for our fire department. And that is primarily for the impact on that department from the closing of the Norwood Hospital. The fire operations has been impacted, particularly with the ambulance, as they now have to travel further to other hospitals in Boston or other towns because the Norwood facility is closed. Looking next at Article 3, that is that main operating budget article, total of $105 million, about a 3.9% increase over the current year. That's the main budget for our school and municipal operations. When we come to that article at town meeting, the moderator will ask you to turn to Appendix D in your town meeting warrant book and lead you through the discussion on the operating budget. Next, we have our capital budget articles, Articles 4 through 7. Articles 4 and 5 are those main base capital articles, with Article 4, $1.3 million for municipal capital, and Article 5, just over $1 million for school capital. Those are at the same levels as in the current year, and those are both funded by free cash. Article 6 is our sewer capital article, $700,000, and that is funded by sewer retained earnings. Article 7 is that additional capital article, again, that we do each year, $682,000 for FY23, and that is funded by a combination of ambulance revenue and meal and hotel tax. A listing of all of the individual projects and items in each of those articles is included in your town meeting book, and it's really a standard listing of the projects to maintain the buildings and reinvest and roll over important equipment for our various school, public safety, and public work department. Next, we have two borrowing articles, Articles 8 and 12. These articles authorize the town to borrow for these appropriations. Article 8, $325,000 for two items. First, for $200,000 to a project to design a Conant Road culvert, and $125,000 to design the next expansion of the cemetery. Article 12 asks for authorization to borrow $900,000 to design the Canton Street sidewalk project. This project most likely will be funded on a construction basis by a state grant. The town does need to do the design piece of that, and that's what's being asked for in Article 12. Article 9 is our funding for our stabilization fund. This is the town's main savings account, important to protect the town in case of emergency, and a very important component of our credit rating. The bar graph shows you the balance in our account each year, as shown in green, $3.8 million in FY23, right in line with where we need to be with our financial policies. Several years ago, the town was able to build this account to appropriate level, and now each year we do a small transfer to maintain on target. So Article 9 asks to transfer $125,000 from free cash to the stabilization fund. Article 10 is funding for our OPEB liability. This is our liability for our post-employment health benefits for our retirees. The bar graph shows the annual appropriation into the OPEB trust account. And as shown in green for FY23, the amount is $1.5 million. As you can see on the chart, in prior years, the town was able to build up to an appropriate annual funding through some savings and changes in our healthcare plans. We now just increase our funding by $25,000 each year to stay on track with what we need to do to address this liability. So again, Article 10 asks for appropriation of $1.5 million into the trust account. And finally, Article 11. Article 11 is a request for an appropriation to the Aid to the Elderly for senior tax relief. The Aid to the Elderly is one of many tools that the town offers for senior tax relief. This is an established, successful program that has been in place since 1999. It provides great assistance to eligible seniors. Eligibility includes being 65 years or older, income at or below the Massachusetts State Circuit Breaker level, that's currently $62,000 a year, and to own their own home in Westwood. This program is a controllable cost to the town. We appropriate approximately $100,000 a year to provide for relief to about 45 to 55 recipients. Our typical recipient in this program is 80 years old and has been a Westwood resident for 40 to 50 years. The article this year at town meeting is to provide for a one-time appropriation of $300,000 funded by free cash into the Aid to the Elderly Fund. The purpose of this funding is to allow for a greater distribution to our senior recipients. It would allow us to increase the number of participants, increase the annual award to each participant, and also will allow us to help offset some of the tax impact of the new Hanlon Deerfield School when that construction bond comes online in FY24. So again, Article 11 would look to fund $300,000 from free cash into that Aid to the Elderly Fund. That does complete our review and update of town finances and also a walkthrough of all of the financial articles. Additional information, again, is available in your town meeting book or on the town's website. And as always, we thank you for your time and your interest in the town's finances, and we thank you for attending annual town meeting.